Hey, happy Friday morning, everybody. Let's go start our 3-day weekend. We took a little vote in our live room this morning with our members, and to a person, they said, let's go start. Some of them are planning on skiing this weekend, a little water skiing. Some are barbecuing. Some are just drinking beer. Some are like me, just stare at the old Netflix for 3 days without any worries. Look, guys, it was good labor report this morning, right? Another good labor report, a little about blowout numbers there. A good sign for the economy. We still got some concerns out there that people are ignoring, but for the most part, you know what I mean? It's a nice, good, happy feeling. Let's go take a look at the market together, guys. Just as a note, no stock of the week this week. You can see those markets are just on fire right now. That VIX is down under 15. It's trickling down to 13. No fear at all in the market. And that's kind of a dangerous time, right? We've talked about that before. When the market gets complacent, a lot of times there might be something on the horizon that people don't expect. I guess the popular term is black swan. But you know, all systems are go right now, and the markets are showing it. You can see the S&P's at an all-time high. The Dow's finally starting to push towards that high. That's kind of the big conundrum right now, though, right? With all this stuff pushing up higher, your Nasdaq, your S&P, your Dow's not making those all-time highs. It's still off that 35,000. It still can't get over that hump. We'll see how it shakes out. Next week, we got the Fed on tap on Wednesday. We've got some things going on that we'll address next week. But for right now, let's get into weekend mode. And like I said, we're not going to do a stock of the week because I don't like buying into this this kind of a rally. I'd rather find some better price points for things. And we just don't see anything right now that really excites us that we haven't already talked about in either the stock of the weeks or in the updates. So other than that, guys, you can see as we scroll down a little, we added about almost 1 million jobs there in June, better than expected. Pre-pandemic era low, blah, blah, blah. This is the result of reopening an economy. Remember, we started from zero and now we're just building back up. This is a great sign, but we still got some headwinds out there that we might want to overcome. You know, that bond, that 10-year bond, we've talked about it, right? Everybody focuses on that bond, but really it's manipulated right now by the Fed. Gold's not showing any inflation concerns. Oil's still trickling around that $75 a barrel. And this is going into July 4th weekend, which is generally a travel and consumption weekend. So we'll see how that affects oil going forward. We've got some OPEC meetings that extended. So there's a little uncertainty in that market that's holding the price back, but it's $75 a barrel. I mean, Jesus Christ, think where we were a year ago with oil. We're still in the oil plays. We're still in that travel leisure play. Really, we didn't make any moves at all this morning. We're still short the spider right now. We'll see if this is topping. You know, we talked about it with Tesla, right, over the last few weeks. Let's go take a look at Tesla since we're talking about it. But we talked about Tesla the last few weeks, and we're seeing kind of the same effect in the market, we think. And what I mean by that is, let's go with the year chart. You know, Tesla had that big run, right, in December, in January, like a lot of the NASDAQ. And then it kind of just sold down there. You know, we had some concerns and stuff. Elon was kind of going off base and all that stuff, and it kind of gyrated. And then it had this big pop back up. We talked about it back here when it lost that 700. It wouldn't see 700 again. And it was kind of funny, right? Yesterday, the thing had a big run on it, and it stopped right at 700. We think a lot of that's happening with the stock market. We're getting to the point where we're getting a lot of good news, right? We're seeing that economic recovery, but we're not seeing certain things happen that we'd like to see, which is a little bit of softness on the price increases and stuff. We talked about how that lumber move was kind of it made sense, right? When people were able to go to the store, but they weren't able to go to the theater or to the bar or to the theme park or whatever. What they did, or on vacation, what they did was they took that money and they put it into home repairs and home renovations and stuff. and that kind of blew up the lumber prices. And then when you started opening the economy, right, you saw the lumber prices come down. Why? Because people were able to go to Disneyland instead of Home Depot. And that's kind of the effect of that. And so don't be fooled by this stuff. And even like the bonds with the holding of that 10-year. Remember, we buy $1 billion or so dollars worth of those bonds every month, our Fed. Other than that, excuse me, guys, had a lot of coffee this morning. I'm getting ready for the 3-day weekend. I don't know about you guys, but you guys know we own Virgin Galactic. We call it Spice, right? SPCE. Some people call it Space. We like to be different, but you can see they kind of a fun thing happened with it, right? I think we talked about it. We wrote some covered calls a week ago. A little over a week ago, the week before this, at $44. And then we had that news about it and it blew it up to $55. And so we rolled those out and we sold the 44s again. And it actually trickled down under 44. We're going to let them expire worthless and keep the money and stuff like that. And then all of a sudden it comes, Branson's going to space before Bezos is. So your little millionaire, billionaire, quadrillionaire, zillionaire battles going on there. And that kind of blew the stock up again. And we just re-rolled those 44s out because that stock's definitely at this point of the company. We love the company and we're keeping the stock, and we got the stock free on an option play way back when it was $20. We had bought some options and they made so much money that we actually exercised a contract or two and kept some of the stock and then used the profit from the other options to pay for it. That was a nice little trade. But we like the stock for the long term, but right now it's not worth $55. Let's be honest about it. It doesn't really it has no earnings, and it has no earnings on the short-term horizon. So we'll stick with those covered calls for you guys, you cats that follow that. Other than that, Lordstown Motors, right? You're back in your EVs and stuff like that. Little DOJ investigation. We had a Trackstar fail a pot test. I didn't even know. Hey guys, I'm gonna be honest with you. In today's world, I didn't even know we tested for pot anymore. I know the NBA, right? The NBA took it off its drug testing. I didn't know the Olympics still tested these kids for pot. I think they all smoke it anyways, right? We should probably smoke some pot after being short the spider and what's happening today, right? You'd think we'd be potheads, but we'll just stick with what we got. And other than that, there's just not a whole lot of news. There's not a whole lot of news. We're rolling in some earnings next week, so we'll see how those go. We had a little bit of shaky news from Ford. We like Ford going forward. We bought that thing at about $10-11 and we're riding it now. We're waiting for that company to kind of turn that corner, right? For you guys that might be looking for something for the stock of the week and stuff. Take a look at Ford. It's a nice little stock. It's cheap right now. And we're kind of holding through some of this bumpy area. Great prospects for the future. And we think that dividend, what'll be the next big move on the stock is when they reinstate that dividend. We'll see how that goes. You can see where the jobs were. They were all in leisure and hospitality and government. And this is kind of a little bit of a red flag here, guys. Leisure and hospitality, no offense to anybody in the industry, but that's not your higher paying jobs. And almost, we follow a lot of labor boards and stuff. And one of the things they talk about is this is really the sector that they were making more money on unemployment than they will when they go back to work. So you have to wonder how, in a consumer-based economy like ours, how that'll affect things going forward. Even though you're back at work, you're making less money. So that'll be interesting. Of course, the government adding jobs does not help much because who pays the government? The government. Who pays the government? We pay them through taxes. So professional businesses and services, that's an important one. That shows you that a lot of those areas are getting strength again. The retail trade, that shows that stores are starting to reopen, and we'll probably start seeing some good earnings reports, right, from your retailers like Macy's, Target, and stuff like that. Your wholesale trade, this is another area where the problem is. Your wholesale, your manufacturing, your high-end jobs, right, information, and your mining and logging, you know, these are your manufacturing jobs. These are jobs that aren't coming back yet. It makes you wonder, are we really producing stuff in this country, or are we just getting back to consuming it, and we're going to be on the import tit again? We'll see how this shakes out. Okay, guys. Other than that, it's been a great week for us. We didn't do much with the stocks this week, but we did, let me get back on screen here. We did make a bunch of money on covered calls, and we were happy about that, right? We sold these covered calls on Tuesday for Friday expiration, and we got this big rally the last couple of days, and we still cashed in all those covered calls. So, you know, there's many ways to skin a cat, guys, in the market, and we like the simple ones, and we like the time-saving ones, because our time, the most important, the most priceless thing in our wealth building system is our time. Our time. If we wanted to work 8 hours at making money, we could go get a job and not have the risk of investing, right? So we don't want our wealth building to be that. You know, we want to spend a few minutes every day, check out the market, maybe do a little live room, hang out for a bit, come on screen, talk to you guys a little bit, share whatever we can with you. But our time is valuable. And so, you know, I forgot where I was going with this. God, I'm in 3-day weekend mode already, guys. And so is everybody else, I hope. But you know what I mean? Time is the most valuable asset you have. You cannot add to it. And when you lose it, it's gone. So just remember that, you know what I mean, guys? Make sure that you keep things simple. Make sure you keep things very time efficient and stuff. And look, I mean, let's be honest, you know, if you've got say you had a $5,000 portfolio and you're making 3 or 4% a month or whatever, and it's taking you 8 hours a day, you can go get a job and not have the risk, right? And probably get a 401k with that where they invest for you. So make sure your wealth building is smart. And if you're having trouble with that, click the link below. You know what I mean? We're here to help. Other than that, God bless America. You guys know over at Financial Reboot, we believe in America. We believe in capitalism. We believe in freedom. And we're going to go enjoy some of that for 3 days. We'll see you guys on Tuesday morning. I'll be back in a few minutes with the crypto show for you crypto nuts out there. It was an interesting week in cryptos, guys, and we'll get into it in the crypto show, okay? But for right now, God bless America. You guys have a great weekend. And regardless of what you're doing, enjoy those freedoms.